You've gone ahead and made the very boring, very adult decision to decide to buy life insurance. The challenge is you don't know which type to buy. I'm going to explain the difference between term insurance and permanent life insurance and hope it gives you an idea of which one's right for you. Derek Mazzarella here with Gateway Financial Partners. When you're deciding between term and permanent insurance, the analogy I want you to think of is renting a house versus buying a house. With term insurance, you are buying a death benefit for a block of time. So you may buy, say, $1 million of coverage and then have it for 20 years. At the end of that 20 years, good news is you're still alive. Bad news, you no longer have any coverage. You can always buy more as long as you qualify with medical underwriting and you pay a presumably much higher premium for those 20 years, the next 20 years. With permanent life insurance, the insurance carrier is essentially going to make sure they have coverage for you for the rest of your life. So instead of paying for a block of time, you're paying for coverage for the rest of your life. The difference is you're paying a much higher premium compared to the term insurance policy. The other difference is the permanent life insurance has a savings component. So much like buying a house, you're building up equity, you're building up what's called cash value. And what this cash value does is you can actually take this money out at a certain point by withdrawing it or taking a loan against it. You're borrowing against it. So why would you do one or the other? So with the term insurance, the benefits, it's low cost. And you can typically buy more coverage because of that cost. You leverage the cost. And most people, when you buy term, you're buying it to cover debts like a mortgage or future student loan payments. And at some point, those will either minimize or go away. So you may not have a need for as much coverage over time. With permanent life insurance, you have a much higher premium, but you're actually going to pay a death benefit. So you're getting value out of it. With a term insurance product, you may outlive the product and you never get the use of the death benefit. It builds up cash value as well. So you have a way to access it. It's tax efficient. So if you take out the money as a loan, you can actually take it out tax free. And then some people will use permanent life insurance for estate planning or as a retirement income source. So depending on what your needs are and what your goals are, term insurance or permanent insurance may make more sense for you. Oftentimes, people will do a blend of the two. Derek Mazzarella with Gateway Financial Partners. Let me know what questions you have.